Apple, of course, amassed a huge amount of cash. Actually, we have a bar chart that sort of showed up by sector, how much cash these different sectors have. You see IT hardware there over on the right. Huge amount of cash. They've said they're going to bring $350 billion back, right, and invest it in one form or another. Right. But one of the things that had not been paid attention to, which is the amount that they had invested in other corporations' bonds. And now reports are maybe not so much.
Well, and this is all, of course, and we talked about this a little bit right when the tax reform, tax cuts, tax whatever came out.
Tax blank.
Tax fill in the blank. This was something that companies now have an incentive not to hold that cash overseas. And when they were holding it overseas, this is what they were investing a lot in. And so cutting that back has a lot of repercussions for the bond market.
Well, and they're also selling. They're trimming, too. It's not they're just not buying, they're trimming. So we also have to look at the investment grade market in terms of supply and demand, not just in terms of what the spread's doing in terms of any kind of risk on and risk off.
But going forward, exactly, to your point, going forward, how is this going to reshape the market a little bit?
But at the same time, you're going to have less, the idea is you might have less issuance, because if you're bringing back the cash, you don't need to issue. So you may not have the big corporations buying, but you also may not have the supply. Right. So I don't think we know yet how that dynamic plays out.
That's exactly right.